Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video for April 17, 2024. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. Well, this is the 4-hour chart of the euro versus US dollar. And if we take a look at this currency pair in trading this week, we have ups, we have downs, we have ups, we have down, we have ups. So it's up and down for the trading week, in other words. What I can say is that this swing area up here between 1.0655 and 1.0675 has been able to hold resistance on the top side. That level was defined through here before moving to the upside. Again, this is a 4-hour chart, so this is a few weeks where the market sort of either found resistance or found support against this area right through here. It wasn't until last week when the price fell below that level, and this week we moved into it on Monday, but then rotated to the downside. And as you can see, the high prices over the last few days have been short of that area up through here. So there is somewhat of a ceiling up there in the euro versus US dollar. Fundamentally, we have the US Federal Reserve shifting their focus, at least from the Fed Chair Powell and Vice Chair Jefferson yesterday, saying, not saying that rate cuts are likely by the end of the year. That was, a shift in their stance. Meanwhile, over in the ECB land, the ECB officials are still looking for a June cut. So that should keep pressure on the euro versus US dollar. Of course, there's always, that story is already known. So it may lead, you never know what may happen, but we do know that this technical resistance up here should keep a lid on the pair. If it does go above that level, then traders could see some more probing to the upside, including this low right here at 1.0694 and the broken 61.8% retracement of the move up from this October low right here to the high price that we saw in December. The low comes in 1.0713, and then this swing area up here up to 314. Those levels should hold resistance as well, but this is the close resistance level now for the euro versus US dollar. Stay below, and you never know how far this pair could go down to different lows, including the low price from 2022 at 1.04503. Let's transition into dollar versus yen, and of course, that story, despite the hike by the Bank of Japan, has continued to see weakness in the yen, strength in the US dollar. The price pushed above the high prices from 2022, 2023, and 2024 in trading last week, and have continued the move to the upside since then. Today's action is somewhat limited, but these levels are highest levels going back to 1990. So there's a lot of momentum in the dollar versus yen to the upside here. What may limit the upside is the idea that the Bank of Japan might come in and look to limit the upside at near the 155 level. That's the quote-unquote benchmark that the market traders have. And in trading yesterday, we did see this swoosh, I should say, to the downside here. That's all the price move from about the 154.75 level down to 153.90-ish type level in a matter of minutes, I guess, and but it was quickly reversed to the upside. People thought maybe that was the Bank of Japan coming in, but typically you get even more than that type of move on intervention. But nevertheless, the market is a little bit nervous about these types of quick swooshes or whooshes, or however you want to phrase it, to the downside that might cause the market to shift its bias from a technical perspective. Technically, speaking of technically, I like to take a look at trend-like moves like this move to the upside, and then outline the 38.2 to 50% retracement level as a level that, if the sellers are serious, they need to get below each of those levels to prove that they are taking back more control. What the 100-hour moving average, that's this blue line in this chart, also happens to be in between those areas through here. So unless the price can get below those levels, are the sellers winning? No, not really. They may be correcting like we did here, but that correction quickly moved to a rotation back to the upside. So be aware of that. When the market trends, you kind of look for levels where either there's strong resistance, and we're at 33-year highs for this dollar versus yen, so there really isn't anything above to really hang your hat on, or you look for the where sellers start to take control by taking the price below a certain level, below the current level, that indicates that sellers are taking back control from the buyers. Get it? Okay, good. So that's what we're going to look for in the dollar versus yen today, and going forward, that is going to be our theme for that currency pair. Finally, let's take a look at the sterling versus US dollar. Again, we'll look at the 4-hour chart, and we know that the pair got out of this range here in trading last week, and is stayed below that level, marching down through the 50% midpoint of the move up from this low going back to October to the high price that we saw, well, in this year in the month of March. So that level comes in 1.2464. As you can see, the price has traded above and below that level over the last 8 hours or less of trading. So there is some apprehension to the downside. We did break below this swing area through here, and if I go back in time and take a look at where that's originated, you can go back to these lows right here and this high right here before the market moved lower, then came back up to that level, and then based against a level right here where the price then moved to the upside and hadn't returned to it until more recently. So that area down here is where we've traded above and below it and trading this week as well. But momentum to the downside could not get down toward the 61.8% retracement down here. That would be the next target on the downside if the sellers are to take more control. Right now, we are back below the 50% retracement, which is good news for the sellers. We did try to move a little bit above it, but backing off against that level. Watch this 27 to 49 area down here. If we start to break back below that level and stay below the level, admittedly, we haven't done a really great job through here. But if we can stay below that level, then that opens the door for further selling down toward the 61.8% retracement. So there you have it. Detailed look at 3 of the major currency pairs. The stories are interesting, and they make sense to me. So pay attention to the technical levels. We'll see how the market reacts to those levels. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.